Aha, my friends, and in this video we're going to talk about how to use multiple time frame analysis to increase your win rate and pass a 400k FTMO challenge and become a funded trader. Let's go. So on this video, I welcome you all to this channel, and please, if you have not yet subscribed, please subscribe, leave a comment, and smash the like button, please. And this is so helpful with, especially with the YouTube algorithms, to spread the word of good trading, so that we can help a number of people to pass these challenges. So one of the things I always want to talk about when it comes to FTMO challenges or any other challenges, my Forex funds FTMO, is to please ensure that you use good risk management. So putting that aside, of course, that means risking 1 to 1.2%. Of course, when you risk 1%, we are talking about losing 10 trades in a row. And of course, that is not easy to do, especially with a seasoned good trader. And if you're really a good trader, then you can risk even up to around 1.2. I really didn't recommend risking more than 1.2% of your account, because 1.2 gives you about a rough estimate of about a possibility of 8 losing trades in a row. So please ensure risk management as a disclaimer. Okay, back to the topic of the day. So when using multiple time frame analysis, we, as you know, in my strategy, as explained before, we use I personally trade 3 time frames. I look at the daily time frame, I look at the 3-hour time frame, and I also look at the 15-minute time frame. I look at them differently. On the daily time frame, I look at my aim is on looking at momentum. I'm a momentum based trader. That is what I am made of. That's what I resonate with well, and that's what works for me. And it's been working for me for quite some time. So I understand it in and out. So like today, we took some trade. We took 2 trades on CADJPY. What I always do is I do my market analysis in the morning. I find out the pair that I'm going to take on, that I'm going to trade for the day, and doesn't mean I'm going to trade it, but if it presents the opportunities for trading on that day, I will take them. So if it doesn't give me the opportunities, then that means I will not take them. Actually, the other thing is trading is a marathon. Trading is not a sprint. So what I look at is, in a week, I understand that I have a simple way, or some simple rule that I follow, that I have to accept. At the beginning of the week, I understand and I affirm it that I am going to have there's what I like to call a runoff day. I will actually, let me put it here. I will have a runaway day, a runaway day. Then I know that I will also have, somehow I expect to get a runaway day. A runaway day is when I may not even have opportunities, because the market will just be ripping through. So I may not even have opportunities. As you know, I am a momentum based trader, but again, I take pullbacks. So sometimes I may not get even pullbacks in my strategy. So I understand that some days in the week I call them runaway days, and some days will be resting days. Why? Because as a trader, you must, it's a must, this is a must, that for you to understand that there are days in the life of a trader, in a week or in a month, when you're not going to trade. Every successful trader has those days, and they understand. In fact, the difference between a successful trader and any other trader is in understanding. They almost understand to the T when not to trade. Any other traders are there to trade any day. They want to trade every day. And that's wrong. That is wrong. And then I also have some other days when I call break-even days. Those days come, I will take the trades, but the trades may not be okay. They may not work out. And they may end up into break-even. And I also have some days that end up in, and then the real days that I call the normal days. So there are 4 categories of days. Okay? So today, fortunately, fortunate enough, today we had a normal day. Today we had a normal day. So that's why we were able to scoop that 6% from the market on CADJPY. Okay, back to our strategy, or back to our market analysis, or multiple time frame analysis. Sorry. You see, when I wake up in the morning, I like to do my analysis. I find out a market that is really strong, that's pushing towards one direction, and that's what CADJPY was doing. CADJPY, this candle here, if you can look at this market here, this candle over here was a really strong candle yesterday. So coming to today, we found a very strong candle. This candle here, if you guys can look at it, this big green candle. So when I look at this big, huge green candle, I looked at momentum following this strong wick to the downside, of course telling me that there is bullish pressure accompanied by this huge bullish candle. So I knew that today we're going to do one thing, to take buys in this market. By the way, I don't care about any past history this side. I don't care about these weak rejections. I don't care about that. All I do is I care about today. So coming into today, let's blend this green. Coming into today, I knew I'm going to look for, again, momentum on the lower time frames. Like I said, I like to trade the daily, the 3-hour and the 15-minute. So coming into the 3-hour time frame, what happened on the 3-hour time frame is this. I had to wait. What I look at is, as long as I get a green candle in this case, or a bullish candle, as long as I get a strong bullish candle to my direction, I will take trades. You see? So starting today, very early in the morning, I was awake because, of course, I was doing my other work. So on the opening of the day, I like to take the lows of the previous candle, the low of the previous candle, which was here, of this candle. You see, this was the last candle of the close yesterday. So I like to take that low. After taking this low, of course, I now have to break down. I understand that I'm going to take these trades, or that the opportunity may be presenting after marking out this. So then that is when I now go back, I continue, and then proceed to the 15-minute. This is an analysis that is coming off the daily. If you look closely, you're going to see the other daily pressure, the weak rejection that was formed on the daily, accompanied by the huge bullish candle. If you can remember that huge candle, this is the candle that broke out this high of the previous candle, broke out the high of the previous candle that had a wick, the previous candle that had a wick. So coming to this day, now I had to look at this wick. I was waiting to see to take trades following any bullish candle coming off the 3 hour. So I marked my time to start looking for opportunities, which was at this time at exactly market open. So that's when again I scaled down to the 15 minute. When I came to the 15-minute time frame, obviously the only thing I was looking for was one. What is that? If you've been with me in the past video, you can get to understand that one thing I look for is a double bottom if I'm taking buys. So when I'm taking buys again, I'll not only look for double bottoms, but I'll also look for again momentum. This is also part of momentum. I want to look for momentum to see how the market breaks key levels. Now, remember, this was the low of the previous 3-hour candle. The low of the previous 3-hour candle. So as long as the market doesn't break below the low of the previous 3-hour candle, that's number one. That's my key level. And then the other one that I isolate is another key level, which is like an order block. So not like, but which is an order block. This is how, of course, I'm going to isolate it from the previous candle, the previous bearish candle, the most previous bearish candle. That is, of course, here. So, excuse me. I will isolate this key level like this. Sorry. And this is the area through which I'm going to look for buys. This is the area. This I do right from here. Okay. I just isolate the last bearish candle is the one I base on. So I come up and look for now the signals, or I wait for my pattern, which is a double bottom for this uptrend. Now here, how will I enter this market? I like to enter this market with one thing. Who can guess that? I like to enter this market with momentum. So taking this trade, I looked at this the market. There was bearish pressure coming into this key level. There's one thing I want to see if we can all remember, or if please you have not yet watched my video, please you can go back and watch the other video. I stressed it, and again I want to say it again. You see, I was strictly trade price action. I'm a price action based person. So I studied these candles. I've studied them for quite some years, close to 2 years, and I've come to understand that usually when the market is supposed to continue, is expected to continue, and it fails to continue, there is something that you should understand. It means the market is actually speaking to you. It's telling you something. So what do I say? If you look at this scenario, this candle, this huge red candle, what did it do? It was so huge, it left a wick to the top. It was expected. We expected after this huge close, this next candle to be a red candle. But what happened? It turned out to be a blue candle, a green candle, a bullish candle, if I can say, with a weak rejection, showing that the bears or the sellers are actually depleted, and potentially they are buyers in this market, accompanied by another candle, which is another bullish candle. I was good to go. I said I'm going to take this trade like this. I like to enter these trades with stop orders, because I don't like getting filled into the market and then the market goes against me and stops me out. And then the other thing I like, when I get filled into the market, there's already momentum. Stop orders, by the way, I encourage all of you, please, or most of you, please, to use stop orders, because they are great. They are good. They are so helpful. I've found out, I've backtested, and I've seen they are much better than market orders, and also much better than limit orders, because limit orders have they lack confluence. And like I said in the previous video, trading is so much as well about confluence. The more confluence you have, the better the chances of the trade, or the probability of the trade playing out. So I had to take this trade like this from this level. Of course, this is some guy called, I think, Joe. You were asking me something in the comments about where I place my stop losses. I place them just below the previous low, which is here. So I place my stop loss below. Of course, I give some room for spreads, of course. Then I go for a 1 to 2.5, which is my minimum, or a 1 to 3. So, but this trade played out so perfectly. I took a 1 to 3s. I did not take anything else, and in a short period of time, in less than 1 hour, I was in and out of the market. And Bob was your uncle in this trade. So that is how I ended up banking the 6%. How does it come? Please don't ask me a lot of questions. Please understand that I usually recommend, by the way, as a starter or as any other traders who are not very experienced, please, to risk 1% or below of your account. If it is on a challenge, a funded challenge, funded traders challenge, then please risk 1% or below, or 0.5. But like I told you in the previous video, I am not I'm currently not trading any challenge, except that that's the reason why I am able to risk 2% of my account at a time. I'm able to risk 2% of my account at a time. So this with a risk reward of 1 to 3, of course, that is 6% of my account. So I managed to bank that, and again we had another trade. I came up, and in the same way, I again waited for the 3-hour candle to close, which again created another momentum candle. So on taking that trade, this time it was let's mark that key level. This time again taking the last low of this candle, this huge candle that left a spike to the top, again marking its low. I was anticipating that the market would continue in the same direction. I came back to the 15-minute time frame, and on coming back to the 15-minute time frame, this time I took a break-even trade, as you can see here. Again, I anticipated, came up. You see, I like to go break-even immediately the moment the market is at a level of around 1 to 1. I take my break-even. So it had just clocked 1 to 1. So once it clocked 1 to 1, I was already at break-even. So I closed this trade at break-even. So that is how I ended up to close the day. So that's how I closed the day at 6%. On Monday, I never took any trade because, of course, there wasn't any opportunity. And that's what is called being a trader. So some days you have opportunities and you will trade. Some days you don't trade. You stay out of the market. By so doing that, you are going to prevent a lot of stops. And another video, I will prepare another video, and please I will come up and show how you can balance between your psychology and your win rate, and how you can. But this is a way using multiple time frames is one way that I really emphasize using, and I use it personally. This is how I trade. So I use it to reduce on the losses that I take. So of course, because I am trading with a high momentum, the daily is in my side, the 3 hours is on my side, and then the 15 minutes is on my side. So I am literally trading with momentum. So that is what I really emphasize that you can use. If please you can. Again, I'm Robert, and please, if you like this video, please subscribe. Don't forget to subscribe, smash the like button, and leave a comment. I'll promise to answer all your questions. Please, I will reply all the comments that you leave below. Please subscribe, and thank you, and catch you in the next video. Peace.